Good afternoon, everybody. We got Fed Day and we got market with some volatility to kick things off. Right now, S&Ps are almost flat to the tick, but you see the volatility from out of the gate higher this morning. Right now, market's just creeping into the red. Chapman Powell still talking on that press conference. We were just airing live right here on TFNN. S&P's negative by 1 point right now. But boy, that was quite a 40-point sell-off in the last 20 minutes or so. We got 53 minutes left to go of trading in the day, and we got S&P's negative by 2. We'll jump to the headlines first before we go through the markets. Fed officials hold rates again. Still see 2 cuts by the end of this year. You go out to 2026, they actually pull 1 cut off on the dot plot. Same thing if you go out to 2027 as well. Interestingly enough, traders now pricing in actually a 74% chance that the Fed is going to lower rates by September. He's talking about tariffs, saying we're going to learn a lot about tariffs throughout the summer. They're a little bit hesitant to move. They keep rates. The overnight lending rate, 4.25% to 4.5% is where we stay. So we'll see where we go, but markets right where we were at the opening bell this morning. That's where you trade down to, and we got the S&P's negative by 1. NASDAQ 100, pretty similar action. We trade down to the lows of this morning. We're trading down 14 points at 21,942. Dow barely in the red right now by 14, 42,539. And you have the Russell in positive territory, not pulling back to where we were this morning. The Russell right now positive by 12 at 2129. We jump to yields on the all-important Fed Day. Always interesting. The first move is not always the move that lasts. Originally, you get a spike higher, but yeah, right now we got lower price, higher yield coming at you on a 10-year right now. On a 10-year, we're talking about 4.4%. The yield on the 10-year, we jump over to the dollar right now. There you go. On higher yield, dollar strength, how about 99? 99 coming at you on the dollar. We got a nice bounce going. We got a nice double bottom. We bounced from 97.60, made less than a week ago, and right now we're in this 99 area on the dollar. As markets rolling over a bit, higher yield coming in. And yeah, with dollar strength, gold. We're pushing the lows of this morning. We're pushing the lows of last night. You back gold up on a daily basis. You have gold trading down $13 right now, or about 0.4% at 33.93. And we got the S&P's lower. You jump over to the VIX right now. Volatility index, 2061. On that volatility index, we put it back to a 5-minute. A little bit of a spike to the 21 area, but as I said, Chairman Powell, he's still talking, and right now, yeah, a little bit of a sell-off. And, you know, some of the verbiage that he has going on, okay? So, when he talks about the uncertainty, okay, we have not been through a situation like this. This is Chairman Powell talking very difficult to make assumptions, talking about tariffs, okay? That process is very hard to predict. We haven't been through a situation like this. I think we'll have to be humble about our ability to forecast it. So they are taking a very cautious approach. And there was the summer line. We feel like we will learn a great deal more over the summer on tariffs. And so that's maybe where September comes through when you're talking about it. But they're still talking about 2 cuts this year. And the farther out you go, the less it means. I mean, if you think back how magnificently the Fed has changed occasionally, you start going out to 2026, 2027. Even the chairman says no one holds these rate paths with a great deal of conviction, talking about that dot plot. They have to make a choice. And I think what he's saying is, hey, we're going to learn a lot this summer, okay? And yeah, don't read too much into those dot plots when the conviction of those dot plots is very uncertain, when who knows where we're going to be 3 months from now, let alone next year, 2 years from now, etc. Nonetheless, you got markets reacting. We had a little bit of a sell-off, and we'll see how we digest the last hour of trading. We jump around to some of the Magnificent 7. Amazon, quite a trade lower throughout the day. You push all the way higher to 218 this morning. Amazon shares right now basically flat on the session. We jump over to Apple. Yeah, give back of the gains in the market as well. Apple shares negative by 13 pennies. Microsoft just relentlessly higher. We make an all-time high on Microsoft this week. On Monday at 480.69. We're just pushing those levels right now, 478.91. Meta pushing basically flat. The market pretty calm right now. And what's so interesting is you go in, we're off tomorrow. So you have Juneteenth holiday tomorrow. Markets closed. You have to digest a Federal Reserve decision. Nothing really surprising in there. Chairman Powell is saying, hey, we don't need to cut yet. The risk is not there. We have plenty of ammunition to come with the cuts when we need to. We're going to see how this plays out. Okay, he talked about the inflationary factors. He talked about a little bit of cooling in there as well. All right. Powell says that the labor market is showing perhaps a very, very slow continued cooling, but that overall many aspects of it are at very healthy levels, and they're not ready to act just yet. And that's where they go from there. And so we get a Fed that stays put, and we'll see, because right now, this is the 10-year we're looking at. And yeah, we are rolling over, man. You were just up to, even if you just take to where we were at noon, okay, 111.05, we're making a 5-minute almost session lows at 110.24. As you have the 10-year rising, we jump over the 2-year, which reacts a lot more to the Fed. And look at that move, right? Lower price, higher yield, okay, even on a 2-year basis is what you're looking at. Now, he's going to face some criticism from the president, I'm sure. You take a look at the yield curve, okay? You're higher in yield across the board. You take a look at the 2-year, actually unchanged, okay, but that's because we came into that number. But then you take a look at the 10-year, slightly higher, and we were lower is what was happening coming into those numbers. So you got higher yield, and that is putting a bid in the dollar, man, at 98.92 right now, and that's putting some weakness into currencies. You have the crude contract, silver down 46 pennies, and yeah, we jump over to crude, and you talk about a little volatility. Look at that move on crude. Just now. Whew. Boy, I don't know if something's happening right now that just happened in that crude market, because that is not a Fed decision, man. Crude just in the last 5 minutes from 73.60 down to 72.32. And I imagine that's a news-driven event as you have markets back in the green right now with the S&Ps up by 8. We got volatility in this market, folks. Look at this market. All right. Look at that crude contract. Volatility at 10 a.m. and boom, we're doing it again. S&P's up by 8. Folks, stay tuned. We're coming back with our man Sean Edwards from Direction. We'll be talking some ETFs. We'll talk some markets. Always a good conversation. S&P's up by 7. It's Fed Day, folks. Don't go away. We're coming back with Sean. Stay tuned.